Welcome to No FOMO Charts YouTube channel. This is Livestream number 10. It's actually Saturday, September 12th, 2020. In this channel and Livestream, I talk about stock charts and technical analysis education. Disclaimer, these videos and charts are for educational purposes only. This is not financial advice. Let's start with the Dow Jones index. If anybody has a question about a stock chart or crypto chart they want to see, please leave a comment in the chat box or the comments below afterwards. Thank you. All right, here we go. Dow Jones. So we just want to keep a longer term perspective. We're on the 1 day chart. Every candle's 1 day. So yes, we've been having some tech sector pullback issues, right? But if you look at the Dow Jones from the recent all-time high, I'm talking about right here on September 2nd, recent all-time high, we're negative 5% down. That's a big deal. That is a big deal. Okay, news likes to panic about that. But again, just remember, back here on June 8th, we had an even larger pullback, which was negative 9%. Okay, so negative 5% is not the end of the world. It's not the end of the world for the stock market. But if we take a very, very broad long-term perspective, we look at a monthly chart, we're starting to get that monthly consolidation. For now. The month is not over yet. We're halfway, about halfway. Weekly, though, yes, we are seeing a little bit of momentum loss right here in the past 1-2 weeks. Right? Also, potential Elliott 5-wave pattern, like I was saying. Potential Elliott 5-wave pattern. But if we just focus on the daily chart, for longer term investing, there is no downtrend confirmed yet. Okay, on a daily though. But yes, if you go intraday, like 4-hour charts, which I usually don't show on this channel, but if you go a 4-hour or you go 1 hour, okay, yes, then we do have the 1 hour downtrend, but finding support at 27,468. But that's more for like scalpers and day traders, but for swing traders, investors, right? We just use the day chart mostly as our guide. So again, the Dow Jones index still in an uptrend. It's barely holding on with this uptrend, okay? Right now, this right here, this price action towards the end, the most recent price action is debatable in terms of what's going to happen, right? Because we had a couple fake outs. In May, end of May, we had a head and shoulders fake out. Okay, and then in beginning of June, we had a big pullback. I was going to say fake out, but reversal. It's like an island top reversal up here, right? Then in beginning of September, okay, the self-fulfilling prophecy of September being a terrible month for stocks is starting to take hold, right? But also what I want to point out, just fundamental-wise, schedule-wise, is we got the USA presidential election coming up in November, in less than 3 months from now. So it would make sense why huge, large, very prominent institutions, banks, hedge funds, family offices are taking some profits off of the table. That's why also, and some foreign funds as well, taking some profits off the table. All right, so let's get into the TA. All right, we're still holding this longer term trend line down here, although we need to tighten it up a little bit. Tighten it up. Okay, so this really depends, right? This is where the trend line can get subjective, but let's say if we want maximum touch points, let's redraw this trend line actually. If we want maximum touch points, like let's start from the bottom here. Okay. And just kind of search out somewhere like that. That makes sense, right? For the most touch points. There's probably 2 in here. We could draw 2. Draw this one as well. But let's just keep that bottom one because it's holding our March 24th low. So here, the trend line was bouncing 1-2 times, and then we fell below it here at the end of September. All right, rejected from the gap and from the all-time high. You see this over here? End of August. People taking their profits. Now, though, a little bit of double bottom action, like I'm saying on that hourly chart, 4 hour. You could still see it on the daily chart. Little bit of double bottom action support at 27,465 area. Okay, I'm going to take this top one off, right? So if we just look at bearish scenario, let's look at the bullish scenario first, right? Resistance above 27,975. See that? Next target 28,385. Let me draw it in yellow so nobody gets confused. Boom, boom. If this really turns out to be double bottom, you can just measure this. Measure from right here, 1.8% from the breakout, basically 2%. So we're looking at like 28,479 up here. Potential target 1, right? Or target 2, first target. So yeah, it's basically these 2 lines right here, these 2 yellow lines as our targets. Mark it in an X. Right? But if we have bearish breakdown targets, 1.8%, 26,977. Okay, that's a legitimate bear target. Another 1.8% down, 26,491. Right here. So we got 2 targets. All right, now we have to see the actual market reaction because yes, we're finding support, but we need the bulls to come back. We need bulls to come back in and save this trend. Right? We're still in an uptrend, but this kind of price action could turn into a downtrend. How? Just lower low, make the lower high if it hasn't been made already, and then pull back down to the next lower low. But if we want the trend reversal, right, also we want to watch out for potential head and shoulders, right? Just look at all the scenarios, potential head and shoulders. If this sets up, right, quite a large drop, possible, -5%. -5% would be all the way down here. Okay, let's mark that. That would be this previous support. Let me erase this one. Right, -5%, and then double that in case if it's extreme, could be way down here, 24,000. Probably up here, right at 25. Psychological probably would be another inflection point. So we just want to watch out. We have 2 scenarios in mind. We have a short-term double bottom on Dow Jones, right? Or a little longer-term potential head and shoulders setting up. We want to see how this is going to play out. All right, but we have those support and resistance targets all right there set up for you. All right, next, S&P 500. S&P 500. Let me turn this to a white line so it's not as distracting. There we go. So still riding this trend line, and we broke down below it. Now, just remember, S&P 500 was at all-time highs, and now we pulled back. Why did we pull back? Because big tech names pulled back, and they sold off. So, right here, again, falling down to the previous gap support, yellow box support, okay? So right now, yellow box support is holding. I'm going to call it gap support, right? So the same, basically a lot of these first 5 charts are going to look pretty similar. So we just do the targets again. 2% from the bottom, right here. The first target is the top, is this midpoint right here, this price, 3393. Okay, and then if we go double the target, 3473, right here, target 2, bullish target number 2, bearish target to the downside. All right, there's not as much of an obvious head and shoulders pattern that's setting up right here on the S&P 500. So let's just get our 2% and -4% targets. So 3252 right here, bearish target number 1, bearish target number 2, down -2%. Again, here 23190. 3190. All right. So want to watch for a potential scenario. Scenario number 1 would be if this turns to double bottom and we try to bounce back up. This trend line is key. The inflection point right here. right? Also, lower low, lower high, lower low. Could be a bearish target scenario, right? To end up down here. But we want to, what people are looking at though, the news always freaks out. They always panic about seeing red, right? So that's what, you know, having technical analysis skills is all about, is because news needs something to talk about. And they always freak out why, you know, when we have big pullback days. But if we look at the charts, look at some technical indicators, right? This is showing right here. I mean, we got moving average crossovers. We got moving average right here holding its, you know, the fanning out for exponential moving averages. It's in an uptrend, right? So if you look at, just visually look at here versus here, right? We're still in the uptrend, still in the uptrend. It's not over yet, but these moving averages are lagging though. They're slow to move, all right? Okay, we are below the pivot point. And this would be telling, if this short-term moving average crossover down, if it crosses down, then that would be pretty bad in the short term, right? So it's really at a crossover point right now, I would say, right? Just looking at a daily chart it's not giving me that much information, but if we go intraday, we go 1 hour chart, we go 4 hour, right? We're getting some, still in the hourly downtrend, right? Hourly downtrend has yet to break out above this, right? 4 hours still in the 4 hour downtrend, intraday. All right, so we need some pretty strong bull action to get us out of here. If somebody's a bull, we need some strong bulls. We need like all the bulls need to come back into this market and buy, but it's stock market, so there needs to be a strong fundamental catalyst. All right, Nasdaq. Nasdaq is a 1 day chart. Again, this support level that I marked in this U down here in the yellow, right here, in the beginning of September, looks like it's not holding so well, okay? But again, let's turn this to white so it's not as confusing. The Nasdaq channel was broken to the downside, okay? This chart is very important because this tech sector, so I have to really watch out for this. All right, so the price action, finding temporary support around 10,855. 10,855. So again, just get these targets out real quick. 2.62%. So the first target is up here at 11,119. Measure it twice. Again, 2.2, 11,380. Right? Boom. Right here. And get those same about 2 point something percent. Targets to the downside, 10,603. Another 2% down might be here. Somewhere right here, 10,366. So these are bearish targets to the downside. So we want to watch out for this pattern. Is that going to happen? Try to break above this, or maybe get tested. Maybe we'll get both. Bounce up, but then get rejected from here and go down for more selling. So we want to see, again, it depends. So it's already having a bearish bias, but if you look at the long-term trend, it's like, well, this happened before. It happened before. If we look at a longer-term monthly chart, this is just monthly consolidation after 5 months straight of gains on the monthly chart. Weekly too, this almost looks like bots, almost. And then finally we get a pullback on the weekly, right? So yes, there is some momentum loss, right? That's what I've been warning people about for like 4 weeks now. Momentum loss, potential, right? Potential again, even on a monthly chart. So you want to watch out for these resistance levels that when we come up to somewhere around here, right? Also on the daily signal, if someone's really sensitive to daily charts, this is a bad signal right there. Bad signal right there. So it's hitting the top of this channel, right? So there's so many clues on the technical analysis stock chart that something bad was going to happen to this chart, right? Or to the stocks, tech stocks. So now what's happening is we fell below this trend line, and now we're in a short-term daily downtrend pattern, right? Short-term daily downtrend pattern. So what we want to watch out for is, are we going to get the bounce or not? Is it going to fail? Right? So this week is critical. So now we saw what I said last week about this past week being critical, right? Is this support area going to hold? So yes, it's holding for now, but it's weak. It's weak. Okay? It's weak. So it is finding a temporary bottom right here at around the 10,818 level, but at the same time where are the bulls? Where are the bulls? Where are the buyers? Right? Because right now, bears, shorts, puts, sellers are in control of this market right now. Fear has gripped some people, right? Or maybe cynicism, right? So want to watch out for that. We just got to be open-minded, got to stay flexible. All right, next up, Russell 2000. All right, so what I was saying last time is Russell 2000 sometimes can be a nice momentum, almost psychological indicator. So what I was saying last time is we get the double top. That's bad. Double top on the Russell 2000. What does that mean? Remember, let me just erase everything so I could draw it fresh. Remember, double top and patterns are bad. Usually, if you're a bull. If you're a bear, you love M patterns. But if you're a bull and you want to buy green, this is bad because what happens is boom, 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 down. I called it right here, over here. So how do you measure this? Boom. Measure the top of the M to the mid of the M to the top of the M. We could go even here, 3%. So when it breaks this level down to the downside, it's going down 3%, exactly right here, this area. Okay? So again, we have this double top. Let me make it yellow box so people know for next time. All right? That's our resistance level up there. So now we found temporary supports in this price, what I call price cluster, right? Trading cluster here and here and here. And there's one down here. But instead of drawing a whole bunch so people get confused, let me just draw 2, right? So basically we're stuck in the middle of that range. But again, momentum starting to turn into almost a consolidation pattern going sideways. See, it's going up. It's going upstairs, basically uptrend here, up until right here, right? Barely try to survive, then start consolidating sideways. Sideways means no trend. Sideways means confusion, hesitation. And then we get the pullback, right? So let's look at Russell 2000 on the monthly chart. All right, so again, taking some gains. But still, if you look at the Russell 2000 in a monthly downtrend, still for 3 years. So here's a major clue about overall kind of stock market like psychology, momentum, right? When the small cap stocks start to have this problem, we have some issues in the broader market overall, right? Because even right here, back in 2019, it's like, well, the rest of the market, Dow Jones, S&P 500 was going up, but the Russell 2000 was going sideways. Then that final breakout, then COVID-19. Right, so same thing here. It's like, all right, we get this rally going on, but this resistance over here is so strong, this top yellow of the 2020 high price, right? We're getting stuck. We got rejected 2 times. Now it's the support test. Daily downtrend, basically almost confirmed, right? If you just very sensitive to lower low, lower high, lower low, is this the lower high? Are we going to keep going lower low down here is the question. Or is this support going to hold? So basically resistance up here, immediate support 2 down here. All right, very simple. Next, VIX. All right, so if we look very carefully, hit my downside target, VIX, coming back down to the support. So just to recap, the replay of August, upside down head and shoulders, finding the support, like I said multiple times, finding support on the gap box, right? Gap box right there, the yellow box, all right? Reversal, broke the neckline, uptrend. Daily uptrend. See this? Higher high, higher low, higher high, higher low. Boom. Then the experienced trader is going to jump in right here. right there. They're not going to wait for this because they know that's going to happen. So they're going to jump in right here. As soon as you see higher high, higher low, higher high, higher low, boom, jump in as a trader, short-term trader, right? Not as an investor. You don't have to do that as an investor, but although it's probably good to also do it as an investor, but just saying, the experienced traders, the pro traders, they're going to jump in, boom, right here, very sensitive. The bots, very sensitive to that price action. All right. So we hit our targets on the VIX. Then we get a pullback. Okay. This is interesting. This is interesting because if you think about it, the market is coming down, right? It's pulling back, but also the VIX, the fear index is also coming down. So the fear is reducing and the stock market is reducing. Very interesting correlation, right? Usually it's the opposite, but if you look at S&P, it's like actually kind of looks the same, right? So very interesting, right? To me, that's suspicious of like bots. That's suspicious of algorithms and suspicious of it's kind of telling of the market of that my interpretation of this is that the market is mixed. The belief of the market is mixed, meaning that some people, maybe a group of people, maybe more of the professionals in the bigger firms are saying, we're going to be fine. 6 months, 1 year from now, economy is going to be fine, like 1 or 2 years, long time horizons. 5 years from now, we're going to be fine. We're going to be fine, right? But then short-term traders, short-term, anyone who bought, tech stocks at the top, unfortunately up here, right? If they sold, unfortunately, and they got stopped out, like if they had a stop loss or something, right? Stop loss, and they got stopped out and they got kicked out of their positions, forced out of their positions, right? Something like this. They got forced out already long ago, right? That's what's triggering this off. The bots. It's the stop losses, the professionals, the bots, the algorithms all coming into play. And then you have the professionals saying, you know what? We're going to be fine. It looks like this pullback is done. So we're getting some selling on the VIX. Interesting. Very interesting. So what's next for VIX? Interesting right here. Excuse me one moment. Is we want to see, all right, so if it went, let's say, if it went 58%, the VIX, let's say 60%, right? Dow Jones 30, where's the halfway point around there? Around here. So if we go below this, right? Where's that price cluster? Where's the support? Somewhere around $26. Support 1, support 2, like 24.20. Support 3, 22, right? So the question on the VIX is this going to be just a bounce, retrace bounce, higher high, high low, high low, high low, high, and it's in a daily downtrend. You see this? Low, lower high, lower low, lower high, lower low. So where's the bottom of this thing? Where's the bottom? There's no clear buy signal yet. Unless someone's looking intraday, there probably is, but on the daily, not yet. All right, let's speed this up. Let's go to gold. So these targets are still holding, but gold, if you notice on gold, finding support in the, to 1930 to 1920 range support. Let me draw a box. All right, finding support at this yellow box area. All right, it's tightening, it's turning into this. It just wants to break out. Gold wants to explode in either direction. Right, and I think I drew these from last time. Is you measure it, 5%. First target 5%. This first X, another 5%, and 10% would be a little higher. So actually, let me move this up a little bit. These targets are higher, right? So gold having some potential upside, right? The psychology could be if people are afraid, they might run back into these safe havens because it's a little lower. We might see a bounce up to 2,000. 3% at least, right? So first target, I would say right there, bullish target. Then you got second bull target, then you got third bull target. If it's going to happen again. But at the same time, though, is if there's maximum fear, right? Because U.S. oil, we'll get to it, but U.S. oil has kind of flash crash, right? If we get maximum fear, like if everything comes down at the same time, then every other asset is probably just going to follow the asset, right? So we're looking at like 1900 as immediate support on gold. You might be wondering, why do I care about gold? Well, gold is a pretty significant asset and commodity that can affect anything like financial related. So it's important. It's important. So again, if we have negative 5% to the downside, we're looking at like 1835 as a new target, right? Because this consolidation is kind of dragging out, so to speak. It's kind of dragging out. We might not hit this one soon, negative 10%, 1731, right? We might not hit that target anytime soon. But if you zoom out, just gigantic, it's basically consolidation. Someone could call it a giant flag, giant pennant, right? But for me, it's just turning into like a symmetrical triangle, right? Equilibrium, tightening, and then which way is it gonna pop? But it's holding this middle heart line. You see this? It's like generally holding this spot right here. So the hesitation on gold. Whenever you get hesitation on gold, right? Whenever you get hesitation on gold, like this, that's what I'm saying. If you watch my videos, I kept saying we're gonna need a breakout on gold. We're gonna get explosive move somewhere, right? So just want to watch out for that. All right. Next, silver. I marked this the other day. Very similar, almost like a bull flag, bull pen. It's not exactly a flag. It's like a symmetrical triangle now, but the concept of the flag is there. And here we go. Symmetrical triangle, right? Tightening pattern. Boom, 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 boom. Right? Then we got our targets. All right. Silver has much larger targets, but I think I did the conservative one, like 8%, plus or minus 8%. So again, these trend lines are still here. It's just going sideways. We need to watch for the break. But what's telling is we have low volume. And it's tightening like this. Something's about to happen in September. Maybe late September, maybe beginning of October. Something in the next 2-3 weeks. There's going to be a move on silver, probably. Gold as well. Look at this volume drop off. It hasn't, and especially this day, September 7th, super low volume on a Wanda exchange. Right? Silver too, September 7th. So watch out for that. All right, dollar currency index. Like I said, this is suspicious. Why is this suspicious? Because we had such a confirmed downtrend and it's tightening. So what means is we had this rally in the dollar, meaning that people sold, they got their money back. Okay? It's like the opposite of the stock market, so to speak, in terms of do people want their money or do people not want their money? Right? Do people want their cash? Do they not want their cash? So, because if you just think about it, like, what do people want right now? Like, what's happening in America? Let's step back from the charts for a second. Just think for a minute. What's happening? Well, kids are going back to school. So we're talking about, the entire U.S. school system is trying to start. They started again, at least like this week, maybe even last month, right? We're talking like college, high school, junior high, elementary schools. They all started, right? Even some companies are telling their employees to come back to the office, right? So we have that going on. We have holidays coming up soon. We got election coming up soon, right? So you have to think about it is, are people going to want to deploy their cash in this market? And then we had the flash crash of tech, which might have scared some people, right? So what are people going to do with their money right now, right? Are they going to put it in stocks and like a lot of money in stocks, right? When we have such a huge crash, probably not. The average person probably going to panic. They see their account down. If they have no experience, then boom, they're going to sell. They lost money, right? So people are going to get their refund is what I'm saying. They're trying to get their refund. They're trying to get their cash back so they could buy other things. So they could buy food and stuff for their family. So they could buy school supplies. So they can buy office supplies. So they could work, go to school, right? So in a family unit, right? Professional traders, but they're doing something else. But basically right here, so we have this uptrend, not uptrend, but this rally in the DXY and the dollar currency index to this resistance level up here, right? These are our next resistance targets up here. But again, it's not confirmed daily uptrend yet because it's just one higher high, higher low might have been established. You need to break out of this range to really confirm the higher high and higher low, meaning we need to see some significant selling in the S&P 500. So that remains to be seen for the next 1 to 2 weeks. Next, US oil. This is what I'm talking about. Flash crash. Flash crash in US oil, right? Definitely broke down out of this wedge. Okay? And if you rewind like 1 or 2 videos ago, I was saying, watch out for this resistance level of $31. Okay? I think I moved it up a little bit to 31.23, but basically the concept, you can see it here, is that got rejected 2, 3, 4 times from $31. And then you get this S&P 500 crash. So now we're almost hitting this breakdown, downside breakdown target. Almost hitting the downside breakdown target, see? Negative 13% down in oil, right? Think about this. Think about it for a second. S&P 500 is down. Nasdaq is down in terms of price. Even the VIX is down. Gold is going sideways. Silver is going sideways. Oil's coming down. So we already have three to 4 major indexes or commodity down, right? Natural gas down. And we'll talk about that in a minute, right? So just want to watch out for it, okay? Is it going to turn into a falling knife? In my opinion on technical analysis, I don't think it's going to turn into this because this is COVID-19, the initial COVID-19 reaction. So I don't think that's going to, I don't think that's going to be so extreme to the downside, right? The only way it's going to get extreme is every single person, investor, has to panic sell. Right? So I don't think we're in a panic sell when we have COVID-19 like vaccine development within 3 to 6 months, maybe another year, right? But my experience shows is to remain open and to not get too biased. What if we get, because CDC director, right? Even Dr. Fauci was saying, just the fall and winter is going to be hard. Health-wise, there's going to be flu season, normal flu season combined with COVID-19 virus, right? We're going to get both at the same time. So it is possible it could get real bad in 3 to 6 months from now. And you have an election, right? So we're going to watch out for that. But going back to US oil, we got this flash crash. What happened? So again, just real quick, we hit this resistance right here at $31 resistance. Boom. Then I was saying, very sensitive last week. This is kind of turning into a daily downtrend. Then boom, explosion down. But the good news, if you're looking for good news, is double bottom right here at 26.75. All right, that's good. So again, if this is going to double bottom, I'm finding a temporary support. It's not the support, right? Although, there's some bullish momentum going on here. There's some bullish momentum, right? Interesting. Although it's below support 2 pivot point. But here we go. Let's just measure this right here. 2.5%. So the first bull target would be 27.42. Right there. Second bull target, if you go up, would be $28 even. Right? Psychological. Boom, boom. Boom. Right there. And then probably one more target in this range where all the moving averages are. So there's that on the upside target. Downside target would be, if you look to the left, there's another previous support, 26.35. There's 25.72. And now we're getting to my downside breakdown target here of like 25. Right? So these are if it starts breaking down, like if we keep getting a barrage of bad news, like constant bad news, then yeah, you probably be thinking about, all right, if this is just like a temporary lower high, then we break down more. It's possible. So always be prepared for both sides. But for now, it looks like US oil has a temporary double bottom. Interesting. But are we going to keep selling? We're going to bounce up. We're going to see in about a day or two. All right, last one for this USA global stock market analysis, natural gas. All right, so natural gas, this chart was a little bit easier than the US oil chart to detect something bad was going to happen. When I saw this playing out in the first week of September, I was saying to myself, ooh, this is going to be bad. This is going to be bad for natural gas. All right, so let me just erase everything. We hit my downside target of this support. We hit both. All right, significant that the technical analysis proof that it works. Let me erase it though, because I want to show you. First thing though, is if you look at the long-term picture of natural gas for like 2 years, right? Downtrend. It's the definition of a downtrend. Although it's not that easy to see, let's go to a weekly chart. Look at this. Look at this. Look at this. Monthly, weekly. Come on. This, you can't tell me this is not a downtrend, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low, lower high. Excuse me. Lower low, lower high, lower low. So it's trying to make a lower high, and we just stopped around here. And now my question is all right, is this make or break time for natural gas? Right? Because we hit this. More specifically, we hit on the weekly, there was a resistance point right here. The 50 EMA rejection. See that turnover point? Even if you didn't have that tool, you could just see here there's a cluster of resistance up here in the previous year saying, oh, there's a danger spot, this general zone, right? So and there's triple bar reversal candle pattern right there. Anyways, but what I was saying on the day chart is head and shoulders. Head and shoulders. I called this. Boom, boom, boom. Neckline right there. Then you measure it. 9%, significant. All right, went a little more than 9%, but basically our target basically hit. That's how I knew. Also, I knew because if you look left, the support, obvious support, like right there. Right, the next obvious support, there's a gap support right here. If we crash down more, going down here. If we crash down even more, they're going down here. Right? So just want to watch out for these support levels, right? And then the head and shoulders is within the context of the broader market in terms of if everything else is crashing, there's a high chance that natural gas is going to come down, right? So natural gas shorts, they rejoiced. Once they shorted here, boom, they got their 9-10%, they're out. But again, there's no super strong buy signal yet on natural gas, right? Not yet. So natural gas still has room down to crash even more. So if it went down 9% from the neck breakdown, another 9%. That's funny. It just moved right now when it says it's going to crash. The bot's watching this, right? Negative 9% would be right in the yellow box, right? This could be another downside target 1, downside target 2. If it's going to bounce, then probably bouncing up to $13 right here. Maybe not quite, but maybe a resistance test at like 1350 as well, right? This is pretty strong resistance up here. So again, it's telling when stocks crash or stocks just rally down, I mean, they break down to the downside. And when I say crash, I'm not talking about negative 50%, worst crash ever in history. I'm just talking about just something a little bit out of the ordinary, like -3, -6%, pull back down on Dow Jones or S&P, which is significant, right? That's a good question. So for me, my style of technical analysis is I just look at the major market indexes and commodities, and that's helped me survive for many years and thrive as a trader for many years. Because I understand, and there's nothing wrong with fundamental analysis, which is where where we're looking at like debt market and stuff like that. But for me, it's just, if you look at, for just pure technical analysis, all we really got to look at is like S&P 500 and Nasdaq, and then once you get those down, you pretty much can really nail down major. It's not perfect, but you could nail down major moves in the market. So there are correlations. Okay, if you want to do research on something, like maybe check out correlations between like what's the correlation like when the S&P 500 moves up or down, like what else moves with it. That's like a huge factor. Huge factor. And the stock market, I would say, is not quite, in my opinion, might not be a direct derivative of the debt market. Might not be a direct derivative because stocks itself are it's an asset. It's like part ownership of a company. So the stock market, from my perspective, is, like S&P 500 are the top 500 selected companies on certain criteria. So it's based upon the companies. So also the stock market leads the general economy by like 6 to 9 months. So yeah, there's a lot of reasons. There's no particular right or wrong. Like I know people who only use fundamental analysis and they talk about things like like GDP, and talk about like debt market, and they talk about derivatives, and talk about all that stuff, and like what's going on in the global economy and stuff. For my style, because I'm a trader and an investor based heavily on technical analysis, it's all about the charts for me. So pretty much, long story short, is for me, it's just technical analysis is the forefront of my style and strategy. But there's no real right or wrong. Like I know a lot of, I met some hedge fund managers where they're just mostly fundamentals analysis, and like they don't even look at charts. So it's just like totally different style. Just let me sum it up like this. A prominent hedge fund manager once taught me. He taught me just use whatever works. That's all he said to me. When I started asking him these questions, like, what, just, in a friendly manner, he's like, just for the stock market or for trading, investing, just like whatever works. Whatever works, just use that for investing or trading. So for me, what works for me that I found over time in my life is just technical analysis. So, but, for you, if like fundamentals and seeing signals in the debt market first, and, derivatives, the relationship between stock market and derivatives, the debt market, if that works for you, totally great. You know what I mean? So, all right, cool. Let's move on to crypto. Thanks for stopping by here. Let's move on to crypto. And I'm trying to make this like shorter because I doubt anyone's going to watch like a 2-hour live stream straight. So let's go to Bitcoin. All right, Bitcoin. Right here. So I'll show you an example of Bitcoin. So let's erase everything. So for me, it's like if I were looking at this fresh, all right, 2019 high, it's like, all right, we had some resistance up here at 13,000 range. What I'm noticing just as a trader, investor in Bitcoin crypto market is that the highs, so to speak, like the peak highs, they're getting lower and lower each year. All right. So this is not even like strong chart analysis, just like an observation that I've noticed just being in the markets. It's like if you go to a week, right? If you go to a weekly chart, right? If we look at the end of 2017 high, it's like almost 20,000, depending on what exchange. But let's just call it 20,000, right? Because some exchanges went to 20,000. 20,000 right there. 2019, right here. The peak of 2019 was like in the 13,000 range. So if you notice, we didn't go to 20,000. And why did that not happen? Basically, it was because there was a hack exchange hack, Trump's tweet, and then market lost momentum. We just crashed. It was over. Then we had this really bad COVID-19 crash. But then if you notice right here, for now, in 2020, right? This is the current high, current 2020 high, right? Stopped in the 12,000 range. So I'm noticing again, if you're subscribed to my trading view, there's my last Bitcoin thing, my chart I did on trading view is the weekly chart. If you want to zoom in like an investor style, if you zoom in, boom, trend line. Let's get a super long trend line. There was one, I think it's this one, like that. You see that bottom support right there? Boom. There's this one as well. So interesting. So now we could think of this as, once we have this context, it's like, oh, well, maybe we're going to get a continuation breakout, right? Higher high, higher low, higher high, higher low, bouncing off this trend line. This is a real setup, right? So we had the flash crash in Bitcoin from 12,000 down to like 10,000 basically, or 9,900, right? Then boom. Maybe, right? I'm not going to call that because it hasn't happened yet. So we have to re-break 12,000 for the crypto market to get like super excited, right? Like 11,000, 12,000, right? We got support right here at 10,000. So these are the key levels. Just if I want to keep it super simple, 10,000, 11,000, 12,000, right? 10, 11, 12. Very simple. But this is a real potential setup. That's why we're finding support, because experienced traders, professional traders are like, investors, professional investors are like, this might explode to the upside, maybe, right? But it could fail. How do I know it could fail? Is because it failed like that like 2-3 times already. Right? 1, 2. This was supposed to be a breakout too, but we had a consolidation, breakout, resistance test, right? Fail. Then you find the support down here. Then you tested it one more time up here and then fail, and we had COVID-19 crash. Then you tested this support down here, tested here, right? This flag broke out of that, and now we're here. But then why I called it is there's a really clear head and shoulders on the daily. This is like the most super obvious head and shoulders, right, to people who do technical analysis, right? Boom, right here. So when I saw this happen, like I said last week, when I saw this rally, I'm like, it's over for the traders. Game over. Why? Because I've experienced in this market trading. People really respond in crypto to technical analysis patterns. So left shoulder, head, right shoulder, neckline. Then if you measure it, boom, 8%. Then neckline down, 8%. Where is the price? Right, literally smack in the 8% zone. And my last video, I said it was going to consolidate basically like this to side or flag it to the side, which basically it's doing this one, bear flag, right? So we're in this consolidation, finding temporary support at 10,100. So now if you look at the chart like this in isolation for a second, we just solo the chart, so to speak, stuck between this consolidation zone right here. Boom, right here. Boom, right here. All right, so we know that this long weekly trend line down here at the 9,000s is probably going to be a support like this. All right, the yellow box, there's probably going to be buyers ready to buy there if Bitcoin crashes down to 9,000, right? There's going to be some bots that I already know. There's orders down in the bots already down there, 9,000. So high probability. So right now it's consolidating. What that means in the relationship probably to the stock market is, again, if you think about Bitcoin and look at this Russell 2000 chart, right? Very similar, right? Look at US oil, very similar, right? Actually, Bitcoin looks more like US oil than the Russell 2000 chart. US oil, right? Just look at this, boom, crash, 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 consolidate sideways. Look at Bitcoin, crash, 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 consolidate sideways. This is what I'm talking. This is what I mean by there's such strong relationships if people kind of do the research. They are there. It's not always 100%, but Bitcoin, what I noticed, moves like a commodity. Also gold, right? Look at gold. What's gold doing? Just going sideways. So therefore, Bitcoin also going sideways. Bitcoin was going sideways up here, but Head and Shoulders destroyed it. Destroyed the momentum. All right, so if this first downside target negative 8%, right? Could be even 10%. Let's say it's 10%. Use a real big one. That's 10,100. What's another 10% down? Another 10% down is 9,000. All right, so we have our second bear target. We had our first bear target, which was here, right? 10,000. Right, but you see how these sticks down here on the bottom candles? That means bots and traders, investors, day traders, they bought that down there. They bought that down there. So again, seeing a little bit of bounce momentum to the downside, but we're stuck between these moving averages right here on these indicators, right? Stuck between there. If you want to take a little quick glance at the inside intraday, all right, the 4-hour momentum, right? Yes, we hit that. Boom, the 4-hour bounce, right? Little 1-hour uptrend going on, right? Higher high, higher low, higher high, higher low, higher high. Boom, just like that. But on the day chart, we might see there is room to rally, right? But with Bitcoin, everybody wants to go to the moon like every week. You know what I mean? So that's what I learned from Bitcoin is like we're not really going to go to the moon, so to speak. We might not go to 20,000. This is why I knew we might hesitate a little bit here. Is because if you think about 2017, I'm talking like 17 right here. So let's see, we're 17 right here to the top in these two vertical lines, right? At the same time, what was happening in the stock market? The S&P 500 was having its greatest rally year in many decades, right? So that's what I mean is what's the word? The timing is not exactly the right time for Bitcoin to go moon style, to go to 20,000. It's not really the exact spot, in my opinion, in history. Yes, we had the halving back in May 2020, but at the same time, it's like we are inside. This is inside of the COVID-19 pandemic, so it's not really the time for all stocks to go super moon high, right? Rally to the moon, which would bring up all other assets to the moon, right? Like crypto assets to the moon. It's not yet. I think just psychologically, when I think about it, when I just like stop looking at charts to just think about the market, once we get a vaccine for COVID-19 and like people actually get injected with it, the general public, and then there's no major side effects, like extreme side effects, and it actually works. The vaccine works, and then people get back to work, and then people start making money again, and then people start spending money. That cycle is probably, in those conditions, we might see Bitcoin start to moon. Like crazy moon, right? But again, there's so many opposing forces to Bitcoin that we might not see the moon happen like this so forcefully again. It might happen over time. We might need to wait for the next president. Like we might need a president that's like crypto friendly, right? Before things go to the moon. So to me, it's like cannabis. It's like MJ. It's like the cannabis sector. If you look at Canada, right? They needed a MJ friendly world leader, right? Forgot, is it prime minister? I forgot. I always get it mixed up. But you know what I'm saying, right? That their world leader, their country leader is cannabis, was basically cannabis friendly, legalized it, right? So the same thing for Bitcoin is The current government, the current institutions like banks and the government, like they don't like Bitcoin. They don't like crypto. So that's why whenever it gets out of control, they're going to pop the bubble in whatever legal way they can. They already did it in 2020. If you do research, if anyone in the future watches, if you do research on why did this stop in 2017, right? It's there. It's there. The bubble was popped on purpose, right? And then here it was stopped with one tweet by the president himself or Trump himself. I'm just saying the concept of a president tweeting something out that Bitcoin's bad, basically, and that the asset has like no value. It's going to make so many people panic, right? So just as conceptually, right? But here is just that loss of momentum, okay? And again, another reason, how do I know this is going to happen? It looks almost exactly the same as the charts as it did right here in the beginning of the year. We had an upside down back here in November 2019. We had upside down shoulders, head and shoulders, to regular head and shoulders, just reversal to reversal. Here we had a symmetrical triangle breakout to a head and shoulders. This is also a Bart pattern, right? Now we're finding support. So those are just my general thoughts. We kind of went on a tangent about Bitcoin. I went on a tangent, but those are my thoughts because we have to think about it is like Bitcoin. Like when I first started crypto, I thought Bitcoin was the thing. You know what I mean? But now I'm super crypto supportive and friendly. Like I believe crypto's the future. It's just like, but it's going to take time for people to adopt it and accept it into the global economy and the culture. It's kind of like, for me, I think of it as like, because the financial institutions, the banks, like they don't want crypto unless it's going to benefit them somehow, like as a corporate entity, right? If they're going to like, I don't know, that's a whole different story. It's controversial too. The government too, right? So, but, Bitcoin is like the people's money, right? That's what Satoshi was saying in the original white paper. It's the people's money. It's the people's currency, right? That's why I'm super friendly about it. But we have to watch out. There's more players in this market. There's basically watch out for the sharks. Watch out for the whales in stocks and crypto. That's why people got hurt. That's why they got hurt up here in S&P 500 land, right? This is the sharks. These are the whales, right? Because if you look at the news, Japan SoftBank company, if they're having $4 billion in options, right? It could be them. This could be them. It could be one firm selling the most of it. Like this big red candle could have been one entity, right? So you got to watch out for that. Same thing with oil. Remember when retail got, I don't know if you remember this, but beginning of this year, retail got destroyed. US oil retail traders got destroyed right here. Because if we found out in the news later that it was one United Kingdom trading firm that crashed the USO market, right? It's like one firm, if they have the skills and enough millions and billions of dollars, they could destroy a market, so to speak. Like I'm talking about retail traders, like mom and pop traders, right? Who just started in terms of like wanting to get in this market, right? So you got to watch out. That's what I'm noticing with like online in the past like 2 weeks. What I'm noticing online in the past 2 weeks is like a lot of retail traders came on. A lot of people, wanting to buy stuff at like higher prices. Because there was the crypto FOMO. We just felt it and people got hurt from that in terms of their account, right? That's why we always need stop loss, risk management, position sizing, and a plan for trading. Investing is a little different, but for trading is like you need those 4 factors, right? And then like emotional control and knowledge and skills. So there's probably up to like 10 factors, right? So, all right. So this head and shoulder, let's get back to this. Sorry, I went on a huge tangent there, but it's sometimes good to talk about fundamentals, psychology. Let's get back to the TA. We'll finish this up. All right, so we got consolidation going to the side. We got bear flag, basically. Bear flag, consolidation. Now, If this is any indication like US oil, then possible we might bounce up on Bitcoin like 3% as a trader to like 10,008 up here, up 3%, up here like 11,000, boom, up here. So there's targets up here, and then the big 12,000 up here. Supports right at 10,000, and then you got 9,500 psychological at the top of this right here. So for me, I'm just staring at this right here in terms of swing trading or investing. Yes, you could go intraday if you want to take a peek at that. Like I said, it's not quite super oversold yet. That's why I'm not getting hyped on crypto. But at the same time, we do have some very short-term moving average crossovers hitting our targets, right? So it's kind of like the market wants to go back up. It's saying, okay, we hit the bounce first. All right, we hit the low bounce and let's bounce back up. Which could happen. I could see that happening. The 1 hour trend change, high, low, high. It's moving averages are open and up now. But we could see a little bit more bounce. But if you look at if you zoom out as an investor to like a weekly or a monthly chart, you zoom out and turn off on these indicators for Bitcoin. We're still looking at this. And what could be bad though is like what supersedes the weekly pattern of this. Like here's an example of why I love technical analysis. Okay, because technical analysis shows patterns, right? So I know I did say earlier that, yeah, we can hit this big weekly trend line and bounce up, right? But the reason why I'm saying I'm waiting for evidence is if you go on one more higher time frame on the monthly, this is a evening star pattern, which is bad, okay? This could be bad, but I'm not going to say it is yet. I'm saying maybe because we're still inside of middle September. September's not over yet, so this candle's not completed yet. But if this closes and it looks exactly like that, then that's bad for Bitcoin. You got to check it out. The evening star triple candle pattern, right? There's a morning star, right? This is like sort of a morning star over here. Is there a clear one? I'm probably not going to find one on monthly. This is like a general evening star pattern. This is morning star, which means up. This one can mean down. So that's why I'm being very cautious right now in this market. All right, let's go to Ethereum. Excuse me. I'll take a sip of water for a sec. Okay, so Ethereum. Because look at this, Ethereum. If we go to a monthly chart, why did Ethereum explode to the upside? Yes, there's hype and FOMO in the crypto market and stocks too. But on technical analysis, very simple. There's just this gigantic double bottom. You see this huge W? Boom, right there. Right? We're seeing, one second. All right. So there was that W pattern, right? Boom, 150%. Can it keep going higher? Yeah, we could probably see that. It's not impossible for Ethereum to go to 500. It already went to 450. We almost hit 500, right? So you want to watch out for that. Just keep an eye on that. Suspicious, right? Suspicious. Still holding this over. So here, let's do this. Let's draw the trend line on Ethereum. Interesting, right? Is it just bouncing here? Like, just think about it. Can we bounce? Yes. Can we break down? Also, yes. But if Bitcoin goes up, then probably Ethereum's going to go up. So we might see a bounce on this. Very interesting. Very interesting. So if like 600 is the general target for that first W pattern, right? Maybe there's going to be like 70% upside on Ethereum, but it's going to take a little while to get there on a weekly. Like we're talking probably 3, 4, 5 months. Interesting though. So we did find, if we use this trend line as support, a lot of traders put their orders in. Bots bought here, right? At like 325. So we have support at 325, 322. Right, we broke through this first resistance level 370. 400 psychological resistance, maybe 450, and then 500 up here. So that's the ranges we're playing in right now. But Ethereum is still in a general uptrend, right? It's not super clear like this one was back in beginning of 2020, but it's still there, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Still higher low, but then if we want to continue this uptrend, Ethereum has to break 500. So for me, I'm not excited about Ethereum as a long-term, or just like, I'm not going to get excited about Ethereum until we start breaking like upper 400s, right? Because this needs to basically start over in the trend. And what are chances it's going to start over? It might happen, right? So just because the stock market, the S&P 500, Nasdaq comes down, does not mean that the whole market is going to crash, right? Again, that's what I call like the fallacy of retail is you hear, if you watch enough CNBC and you listen to the phone calls of these people calling in for advice, like on Jim Cramer's show, right? If you read some YouTube comments and you just read articles, right? Or you talk to people, if I just like talk to people outside, right? While I'm waiting in line, or I overhear someone talk about stocks or something like that. Retail sells when there's red. Okay? If there's red, like retail just panics and sells. But the professionals, they already have a game plan in their minds. That's what I learned about the pros, is they pretty much got a game plan for like almost every scenario for the stocks that they're trading. They're talking about S&P 500, oil, gold, Bitcoin. Like the pros, they're already like 1, 2, 3 months way ahead of the, like, I'm going to call the average trader, investor, right? That's why retail always gets crushed, because the pros, they already had this game plan and they got millions of dollars to back it up. So that's like, I just got to remind people of that. There's sharks and whales waiting to destroy retail traders. That's like one of their goals, because what do they get when they win? They get the money when they win, the trade, the battle, right? So we got to watch out for that. That's on the risk management side. All right, so Ethereum, again, we had a nice bounce right here, but again, it's not entirely clear. We're in a longer term uptrend, but it's like the short term uptrend, if you use this moving average as a guide, is like, well, we got to break 400, 450 for the market to get like excited, for some hype to come back, right? Because if this turns into a lower low, we're screwed. As traders, we're screwed. For Ethereum, like if it does this, boom, boom, and then we have another crash, like, oh, come on, it's over for now, right? For like another 1 or 2 months. So this Ethereum needs to go up, basically. And superseding that, Bitcoin needs to break out of this 10,500 and go back up to 11,000. If it doesn't, it turns to a lower high and we break down. You're going to see the exact same pattern on like almost all the altcoins. Switch to the, let's try to speed this up. I might not do all the cryptos today. We'll just look at it real fast, because I talked a lot already about some more high level concepts today. So again, let's do this as a practice example. If you turn off all the indicators, like if you use no indicators on charts, you just use price analysis, Ripple XRP in this downtrend, right? Took a little while, but I remember like 1, 2, 3 videos ago, I said, watch out for this double top right here on XRP. Probably August, middle of August. That was a month ago. I was saying, watch out for this. Okay, let's erase this now. And pattern, double top pattern. So this is for me where it's like, this is just pure technical analysis in crypto. And momentum and psychology and pattern, it's going down probably. Going down. So how much down? Measure it. 16%. 16%. And then where did it go? Exactly down 16%. So, you know, I'm not the only one using TA, technical analysis, in this market, as a lot of people are. So 20%, 20 cents is support, 19 cents support, 18 cents support down here. So again, this is what I'm saying is whenever you get these kind of double tops or some hesitation like this, that's when I start getting really, really cautious in the market. But at the same time, this is exactly where I saw a lot of retail traders and FOMO like trying to jump in on this market. When this flag broke out and this broke out, people trying to get in here. But if you're holding, it depends again on someone's time horizon. If someone's going to hold for like 20 years or their whole life, then swing trading, day trading, scalping, these short term, like, 5 minute, 1 hour, even sometimes day chart, doesn't really matter that much, right? If someone's going to hold for like 20 years, it's just they need to make sure they're holding the right stock in crypto that's actually going to go up 20 years from now, meaning like premium cryptos and coins, not like the most random altcoin, right? We're talking about like what's top 5, top 3, top 5, maybe top 10, but top 3 is Bitcoin, Ethereum, XRP, generally by market cap, right? All right, so you want to watch out for this now because we got a daily downtrend in play. So even if this bounces up, is like, okay, there's a resistance right here at 25 cents, psychological resistance right there, right? So for me, a ripple is like nothing is basically happening unless we break out or break down from 25 cents. If we do this, then we have to really, the whole market bulls have to come back. If we do this, but if it breaks down, then shorts and futures will take over, and then less demand, price going to fall down. All right, Bitcoin Cash. Again, Bitcoin Cash, very close to the Bitcoin charts where you had a breakdown, and I called this flag. Right? Because it happens like almost all the time. But if you look very, very carefully though, some kind of baby upside down head and shoulders. So baby. It's there. I'm not getting super excited yet because if this was on Bitcoin, I'd be a little more excited. But it's almost like a double bottom right here on Bitcoin. Right? A triple bottom. Right? So this could actually play out. Let's just pretend what happens when this plays out. Let's see. This goes 3%, then 3% target be 237. Percent target up 245. Right? So we'll just mark this as the potential for that one, for cash. If it doesn't, then it's going straight into this yellow box again. Before I move on, Sarah, I have a quick question. What region of the world are you in? I'm just curious. Like, are you in North America, Europe, or Asia? I'm just curious. Because I'm in North America, so that's where my perspective is coming from. I'm just wondering about you. Okay. So, ADA, Cardano, Kraken. Again, if you kind of zoom out, we had a huge giant head and shoulders on Cardano. It's like textbook. A little bit. There's a large head in here, but it's right there. Boom, boom, boom. Neckline right there. When we lost the momentum, 25%, this might not go down. Oh, it did. 25%. Wow. Technical analysis, right? Boom. So 25%. We're another bad case on Kraken. On Cardano over time. If it goes down another 25%, it's going back down to like 6-7 cents. Right? So hit that target 1, target 2. If it bounces up for a lower high, right? Because it's in a downtrend, lower low, lower high, lower low, lower high, lower low, lower high, could go bounce up to 10 cents first, right? Before we crash back down. Right? Maybe 12 cents up here is that upper resistance. But if you just draw a trend line, very simple, without even using a lot of indicator tools. See that? Broken. Tested, broke down. See? Very simple. Like we don't even need to turn on RSI or MACD, right? Although right now there is actually an interesting potential bounce setup in play because we hit that bottom 200 EMA, right? Could bounce. So there's like a little bit more momentum angling this way on Cardano right now. But again, if anything happens bad with Bitcoin and stocks, then this will just stop and go down like that. But right now, as of this minute, there's a little bit of momentum pointing up. It's a Saturday though, so I'm not getting excited. It's Saturday. It's a Saturday. So let's see. Right here, yep. So there's a little bit of bounce power left in Cardano, but not getting super excited about that. So, but it might help somebody out there who watch this. All right, so Litecoin right here again, head and shoulders pattern. So let's just do a quick super fast measurement. 25% from the breakdown went down, not quite 25%, but went out to the support. Right here. Boom. Boom, boom, boom. Like that. Very simple. Right. So, okay, crypto. See, crypto, I think what people need to know the difference between crypto and stocks is that crypto is literally 3 times faster than the stock market because the stock market is only open and then it closes in like the daytime. For North America, New York, it's basically 6:30 a.m. Eastern Standard Time is the open, close at 1 o'clock p.m. Eastern Standard Time, or 1:30 for futures, p.m. Eastern Standard Time, 1 p.m. Eastern Standard Time. Right, so okay, thank you, Sarah. So we're in the same North America region. Because I'm just asking is because like if somebody's living in Asia and they're watching this stream, they have a different perspective. Like they have their own bias, right? Because their news is saying something different. North American news is saying something different right now. European news is saying something different right now. But what to me what am I trying to say here is basically like the tool that helps me like gain control in terms of like perspective and knowledge and skill and being able to not get swayed by news is the technical analysis charts. So I was just wondering what area. So maybe I'll focus on a little more North American stocks in the next live stream. All right, so Binance Coin, BNB, right? We were in an uptrend. Higher high, higher low, higher high, higher low, higher high. Then we hit this lower low. Or lower high. We broke down way below here, and then we're breaking up above here. So again, when Binance Coin runs, it likes to run. That's what I've learned about Binance Coin. When Binance Coin gets the hype, this might have been one of the only ones. All right, let's see. Why did it go up? Potential upside down head and shoulders if somebody does this. There's one reason right there on the charts. One reason right there. Right? Boom. So, very interesting. Let's measure this. See if it was the TA doing this. 33%. Yeah, up there, almost 33%. So right there, that's the reason why there's a 4-hour upside down head and shoulders with the oversold conditions, with the reversal to there. So looks like Binance Coin, the resistance at $30. All right, EOS, again, just turning into this flag pattern right there. Flag pattern, boom, boom, like that. Okay, going sideways, equilibrium, but it almost looks like bot trading when it goes so tight like that and sideways. So again, EOS basically just waiting on Bitcoin, but EOS itself had its own head and shoulder pattern. So just gotta watch out for that. Actually, let me give some targets though. So upside target would be $3. Downside target would be $2.50. So EOS probably gonna end up at either $3 or $2.50. Let's go to link. Which chart looks better? Let's use Link USD on Coinbase because it's North American exchange. All right, so if you look here, this trend line, boom, broke down here. So if you look very, very carefully, Link USD is lower low, lower high, lower low, bounce up to lower high. So again, I know if you watch people on YouTube and stuff, they're using like 1, 2, 3, 4, 5 indicators and such. But for me, it's like if you just use trend lines and support and resistance and just think about some psychology, right? It's totally possible to get a handle on the market, right? So if you look here is a trend line and we have a lower low, lower high, lower low, lower high, right? So this bounce underway, this was back on September 6th, right? So $13 right now is the resistance. Next resistance would be like 15 area. If we break down, then this is going to 9 or 10. So remember last long time ago when we were up here and I was saying, where's Link gonna go? Link, again, this is because that Dow Jones theory is sometimes there's a 50% retrace bounce, right? Sometimes. So right when I said in the $9 to $10 range exactly, boom, right there. All right, so it works. Not always though. So you got to have a stop loss. So if somebody were to trade this, is like way back here, you put a preemptive order. This is one strategy. You put a preemptive order, right? Only a small amount of capital, right? This is a trading exercise. And say, all right, where's the next logical resistance? Right here, maybe like a 20 to 25%. And that trade is already over now. So just saying it's possible, except on crypto exchanges we can't put a stop loss, so it's about position sizing, like putting less money in an order, like way down here. And there's risk though. All right, so XLM, Stellar, okay, this is like a super drawn out head and shoulders, but there's resistance up here. If you look at a weekly, you'll probably see something better right here. This shooting star in August, that's a monthly, that's also a pattern. So we could just use that example. Here's a good example. Shooting star patterns, okay, are bearish candle patterns, usually, especially if it happens on a monthly or a weekly. This is how I knew back in February 2020, the entire stock market was going to crash. That's how I knew. There's a hint right there. So, day chart. Go back to day chart, finding some resistance up here. Also, it was losing momentum, and we came back down to this support price cluster right here. So finding support at like 8 cents-ish, right? But for me, I knew XLM is over for traders when this is lower low, lower high. As soon as we got this, broke that low, I'm like, oh, this is going down. Shorts and futures jumped on that. Boom. That's why I got this huge candle, a little bit of short covering and saying, let's go one more time. Then they stopped here finally. So lower low, lower high, lower low, lower high. Now it's seeking out the lower high over here. So let's look at like 8 cent, 9 cent range. All right, Ocean Protocol. This will be the last one for this. Ocean Protocol, Ocean BTC, right? This trend line is still holding. There's actually, let's draw a new trend line right here. There's a new one right here. So again, Ocean, we give some time to this, but again, let the chart play out to see what direction it's going to go. When I saw this happen right here on some consolidation stuff right here, this flag right here, I'm like, okay, we break out above, that's fine. But we're in the resistance zone, got a doji candle. Right there, indecision candle. Then you get the evening star triple candle bearish pattern right there. Then I knew game over. For traders, I'm talking about day traders, right? This is why it's really important for crypto stocks to always buy at a position of value. Okay, so let me bring up one more thing before we move on. And this is for anyone who missed last week. Let me just get this up right here. I showed this last time, but this is the ultimate quote. This is the ultimate quote. Be fearful. This is Warren Buffett, one of the greatest investors of all time. This applies to like almost everything I've ever seen in my whole career as a trader and technical analyst, right? Analyst. Is be fearful when others are greedy. Inversely, be greedy when others are fearful. how does this apply to Bitcoin? Okay, let's go back to Bitcoin. Let's bring up Bitcoin on here. Wait, where am I? Here we go. So what is he talking about? So, okay, wait a second. It's like, if I'm a bull, if I want to buy green, be fearful when others are greedy. So where were people greedy? I don't want to use this year as an example. It's too personal. But if we look at back here in 2017, where were people greedy for Bitcoin? Like right here. Right here. When Bitcoin went from 6,000 to 20,000, oh, you bet it was maximum greed, maximum FOMO, maximum hype in Bitcoin. So therefore, the axiom, the maxim of Warren Buffett, he said, when people are greedy, we have to start being afraid. But not being scared, what he means is start selling some. Not all of it, but sell some. Like Jim Cramer taught me. One thing I learned from Jim Cramer is you never have to go all in or all out at one spot. There's no rule you have to do that. It's actually not the greatest position management unless you know like 100% something's wrong. I mean, if there's like accounting fraud, for example, like Luckin Coffee, when they had accounting fraud, the Chinese coffee chain, when they had accounting fraud, and then that basically crashed the entire Luckin Coffee stock and they got delisted, you can get all out there in like those situations, right? But when we're talking about good companies, if we're talking about like Apple and Tesla, and we're talking about Bitcoin, well, maybe not Bitcoin for some people, but like gold or, oil or, excuse me. Excuse me. Oil or, I was going to say Microsoft, and then start coughing. But let me get some water. Basically, that's position management, where maybe you're going to only sell 10% of the position, or 5%, or 25%, or 20%. Because going all in, all out, that reminds me of like no limit Texas Hold'em poker. You know what I mean? It's like going all in, I'm all in, I'm all in. It's like at some point you're going to lose everything. There's no way somebody's going to be 100% correct all the time. Impossible. Impossible. Right? That's why there's that quote where 90 to 95% of traders, retail traders and investors, they eventually lose all of their money or most of their account because they keep trying to go all in all the time. So we want to be fearful when others are greedy. All right, so when we got Bitcoin 20,000 back in 2017, that's when people are greedy, and then we had to be afraid, meaning sell. And then we did see a lot of people sell. Right here, the logic was, all right, we're going to bounce. Are we going to bounce? And we saw this lower high being set, and I'm sure a lot of traders and investors said, boom, I'm out. I know one guy, I remember learning from one guy, he said because everybody around him who had no business in the stock market starting to say like, let's buy Bitcoin, he knew, and he sold all his coins literally the day of the top, he told me. Literally the day of the top. It was like insane. It's the best play ever. December 17, 2017. It's the greatest trade ever for him, right? Literally got out the top of Bitcoin. So, in the past. So again, the inverse is true. Be greedy when others are fearful. Now, the perfect example of that is COVID-19. Where's COVID-19 crash? Right here. COVID-19 crash. I don't like to say that word too much because it gives people like PTSD. So the pandemic, right? 10,650. We had this pandemic crash. Boom, right here. Look at this huge amount of selling. I remember that day. Even for me, I was like, wow, this is going to be a historical day for Bitcoin. This one's going in the books. When you had that much selling in one day, right? You bet. People are fearful, right? Fearful, and then what does Warren Buffett say to do? Gotta be greedy. Gotta buy. Not greedy as in like you want to destroy other people, but just be like, oh, he taught me. Warren Buffett taught me in an interview. He said he doesn't wish ill on other people. Like he doesn't want bad stuff to happen to other people. But if a good stock is heavily discounted and there's nothing wrong with the stock of the company, he's like, sure, I'm going to buy it. Sure, I'll take it. I'll buy. Same thing right here. Bitcoin, like I was saying in the early streams of this channel, Bitcoin did not fundamentally change in this crash. The only thing that changed was people's perception of Bitcoin and the fear in the world. And look at all these buyers down here. There's probably bots. There's probably hedge fund bots and algorithms, but some pros, experienced professionals, they're like, oh yeah, super discounted Bitcoin, yeah. $3,000, $4,000 Bitcoin, sure. Hodlers, lifetime holders, they're like, yeah, I'll buy more. Sure. 4,000 Bitcoin, sure. Right? Or like Ethereum is like $100 Ethereum, yeah, yes. So again, the same concept holds here. Fear, and then we find some temporary bottom, and then buy, greed. Right? So I want to watch out for that. All right, so because I think a lot of people are from North America, mostly who watch this, or people mostly watching US stocks. Let's just finish up right here. I know it went super long. Today was more about like concepts, okay? Idea, psychology, mentality. A little bit more information and knowledge in this one instead of just pure charts. So let's go to some stocks. Let's go to AAPL. Apple. Let's look at Apple. What the heck happened? Actually, let's go to Tesla first. What happened with Tesla? Why? So first thing we need to remember is stocks have earnings schedule. Okay, so Tesla had earnings on July 23rd. I remember that day, right? And then they announced the stock split this day, August 11th, if my memory serves correctly. And the charts is like boom. That's why you got the stock split news, the 5-to-1 stock split news. But at the same time, again, is remember there's sharks and whales in this market. People bought way back here. They're already up in the money 100 to 200%. Some people up even 300% on Tesla, right? And so we have to remember is when we're trading stocks or buying, selling stocks is you're literally buying from somebody else. Usually it's the exchange or entity, but it's like you're going to the market and you're buying and selling your stocks. Or think about like sometimes with a lot of people I use fruit as an example. Like it's like a farmer's market. You got something to buy or sell, you go down to the farmer's market, you set up shop, and you're gonna try and buy and sell. But you have to remember is sometimes the stock market is just a matter of timing in terms of like when did somebody buy, right? If somebody bought Tesla in the $100 relative price range, and now it's at $497.25 at the top here, they're going to start looking for somebody to sell to. And who's usually the first in line? Like newer retail traders, unfortunately. The cycle of rinse, repeat, that's how the sharks and whales get so rich off retail traders all the time. Because retail trade, like again, when I think about hedge funds institutions, they have so much more knowledge, information, money, skills, human resources than like me versus someone like me that's like one guy trading, right? I don't want to battle the hedge funds. I don't want to fight them because I'm going to lose, right? But what I want to do is I want to get in synchronized with them, okay? I'm not trying to become their ally, but it's like, all right, what are they going to do? I'm trying to figure out what is my opponent going to do. Somebody taught me that too. What's my opponent going to do in this market? What's the most likely scenario for hedge funds institutions? What are they going to do? So let me try to get one step ahead of them, right? That's the advantage of retail. It's like finding Nemo, right? Nemo's fast, but he's small. He's fast. He's nimble. He could go in and out of stocks and spots really fast. But the sharks, though, they're slow, but they got power. They could destroy people, accounts, stocks. They sell millions or billions of dollars. That stock could go up a lot or it could go down a lot, right? They got the power. They got the control of the market. But retail, it's easy to just like jump around and like that. So that's what I'm saying. All right, so let's end with Tesla. All right, so again, if we look at a monthly chart, like Tesla having its all-time FOMO breakout right now. But again, if we learn technical analysis, let me turn these earnings break off so you can see. Right here, if we learn some technical analysis basic, and this is like advanced, but Elliott wave, 1, 2, 3, 4, and maybe the 5th wave. We're up here, right? When we hit that 5th wave, it's over. It's done, usually. For trading, short-term trading, right? This is like 1 or 2 years. Because remember, Tesla used to be, relatively speaking, $37. All of a sudden, we're $372. Right? Just think about that for a second. 37 and now we're $372. That's not the final price, but someone got 10 times their money. They're going to take some profit. Because if you're up 1,000%, usually when things go up 1,000%, you see some selling. All right, so we might see ABC correction over time, maybe, right? But again, this is such a interesting year that anything's possible. All right, let's go back to daily chart. Let's finish this up. It looks like we're going 2 hours again. All right, so let's get the trend for Tesla. If we look at this year, are we at the big COVID-19 pullback into the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We just made that higher low right there at 329. So then we're bouncing. Now the question is how high is this going to bounce? If to remain an uptrend on Tesla, this thing's got to break out above $500. If it doesn't, then it's probably going to lose momentum and you're going to see a lot more shorts try to push and crush this thing down so they make profits selling, right? So what we got to see here is this holding of this trend line, which it's holding. That's fine. It's holding. But ultimately, though, it's got to break out here. So we're seeing a little bit of this ascending triangle pattern start to form. A little bit. It's a bit of a stretch. This, parallel channel is more, this is like Nasdaq, right? It looks exactly like Nasdaq. So if it's going to bounce, hopefully, it's going to go to 424. Hopefully it's going to go to 500. Right? And then if it breaks 500 and goes to like 550 and it's going to retest 500 like that. So again, it happens like almost every single time with these big tech stocks. But at the same time, though, if something bad happens, Tesla breaks down. If it keeps going down 300, retest 350 and break down, I would not be surprised. Because at this point, it's a big question mark that the market needs to prove. Where are we going? Up or down? Up or down? The traders got to prove themselves. It's going to happen in the next, over the next month. So let me get some real targets and we'll move on. Bull target right here, 425, right? Bull target 425 up here. Bear target 325. Ultimate target up here, 500. All right, well, watch out for that. Okay, Apple. Again, pull back. Didn't quite hit the target yet, so we can just erase that. All right. But if you look at Apple, it's a little overextended. This used to be the highest price on Apple, $82. Right? Boom. So again, trend lines do work. But again, we have this gap resistance in the price right here at about $100. So I wouldn't be surprised if Apple breaks down to retest the $100 range, because this is basically pre-stock split over here under $100. Post stock split, we went up $100, but then if you just think from the day of the news up to right now, current price, Apple's up 15%, which is a lot for Apple because it's like billions of dollars market cap. But technically, we're just testing this trend line. It needs to hold the support. If this support fails, we're going straight down to 100 eventually. Right? Could happen in a matter of 2 weeks. It's possible if the tech sell-off doesn't stop. if the big firms don't stop selling, retail's going to get hurt. But it's really up to this. But if you could look at short-term momentum, this is where the short-term momentum kind of helps. Like a 4 hour. All right. Yeah. Possible bounce coming on next week. Possible. It really depends though. Remember, Apple's just one company though. It's not the only company. Let's quickly look at some other tech stocks like Amazon. Amazon right here. Suspicious. Amazon in a bit of a downtrending angle right now. It looks like lower low, lower high. If this doesn't stop on Amazon, then I'm expecting lower low down to like 3,000 test. That could be pretty bad, right? So stuck right here. $3,286 is the resistance above, right here. So I want to watch out for this. We got a trend line going. All right, so yeah, this trend line works, right? It's not all random. So, but again, if Amazon wants to, excuse me, keep like coughing. If Amazon wants to continue the uptrend, it has to break above 3,540 up here. Okay. If it goes down into the downtrend, we're looking at 3,000. So right now, 3,000 is downside, 3,330 is upside. Let's take a look at Google. Google again. This is an interesting exercise where you use trend lines to find the pattern. You find the pattern, you see this, right? And then there was this other trend line like over here. Right there. Right there. So we had the breakout and the subsequent breakdown, right? 1464 support. It's not over yet. Higher high, higher low, higher high, higher low, higher high. If this holds here, it's still kind of okay for Google. It's not game over yet. If it loses this like that, then it's kind of game over for Google in the short term trading. Okay, Microsoft, same deal. We had this upward angled wedge and we just lost it. We tested it, right? And we broke down. So right now it remains to be seen. The next week is that we're going to bounce back up. We're going to get some recovery to try to test that. If not, we're going down. Very simple. Netflix, I'm going to say this is more of a larger M on Netflix, so I'm not surprised we're coming down here. Back to this price level. It's about 15%. That's big. So 15% could send Netflix back down to $400 range. So this support of 478 is critically important to hold that for bulls. Facebook, look at this double top, what I called last time. Back down into here is exactly where I was saying it might go. And the price might go down into here. But if it really needs to hold, okay, we got a gap resistance right here in the upper 250 range. So if this breaks down, I'm expecting to hit 250. If it holds here nicely at 262 and get a tech rally this week, then I'm expecting back to 280. Okay, so let's just have a quick glance here. So let's just look at those American stocks, North American stocks. If anyone has a list, not a list, but if you have a couple of American stocks and American cryptos you want to see, please leave a comment in the chat box right now or in the comments after this video is done, and then I'll make sure to add it to next week's video. So let's just very, very quickly, just like couple minutes, just look at global, okay? Because right now the focus is on America right now, North American stocks. But let's look at where's the global section? Hold on. Because I just want to see the effect on Shanghai Composite, right? Shanghai Composite in a downtrend. I'm just going to call it daily downtrend. Hang Seng Index in a daily downtrend. Nikkei 225, actually Japan in actually an uptrend, strangely. They're getting a new prime minister. Kospi, even South Korea stocks, even after the typhoons, are still in an uptrend. So they're just like holding on. They're holding on inside here. Strong, they're holding on. Australia in a daily downtrend, fortunately. Unfortunately, sorry to hear what's going on over there. And then Same thing with, sorry to hear what's going on with all the fires right now in America. It's crazy. And the hurricanes. Weather's going bonkers. All right, so Nifty 50 right now, a little bit of daily downtrend. Right. Euro next. I'm going to say just kind of consolidating inside this triangle. Right now, UK still in daily downtrend. Swiss market index holding on inside of here. Consolidating. Paris CAC 40 consolidating sideways still towards the upside. The triangle DAX holding this trend line as support. Canada Stock Exchange Toronto broke down below the wedge. And we're holding on. Possible reversal, possible. So there we have it, everybody. Thanks for watching this live stream. So please remember, if you have not already, if you ever watch this in the future, please remember to, if you want to, click subscribe. Hit the like button if you want to, and turn on notifications for new videos. Any donations to the Patreon for this channel or PayPal are always appreciated to keep this channel going. I'm really just trying to provide good, solid, actionable technical analysis education. And remember, disclaimer, these videos are for educational purposes only. This is not financial advice. Thank you for watching. I hope you have a great week and weekend. Let's try to stay safe, because there's a lot of crazy stuff happening in the world. So see you next time. Thank you. Bye-bye.